Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
What's up, Dan? We are back. We are back again, my friend.
Welcome.
Oh, yes. Welcome. You know, in our intro, we say, where we cut through the noise and give you the real deal on real estate investing. And that's exactly the ride I want to take you on today because it is a wild one. Let's cut through the noise. Yeah. It's particularly what is happening with our economy. Man, right? Inflation is high.
I don't know.
Rates are jumping.
Yeah.
And the stock market, well,
we had a rough week.
That's been a whole different zone.
It was the worst week in the market since, worst week. I know it was in 2023, but I'm trying to say it was like early 2023. Yeah, so it's like almost 3 years of, pretty decent market and then a week of just craziness. But I don't know. I mean, I think like you change stuff, right? Like, you get a new president in there. Yeah. Whole new administration. Yeah. You got all these new things. You got this Doge thing, right? And everybody's getting fired.
Everybody's
and
freaking out.
That's going on. I'm not shocked, right? Like, I don't know. A lot of people are just like, oh my God, I thought, when Trump got in office, the market was supposed to be amazing and all things. I don't know. Maybe it's got to get a little worse before it's got to get better.
Yeah.
I don't know.
And it's shifting relatively quickly. Could be part of that shock, right? So, how do we tie that back to real estate? So what does this mean for investors?
Yeah, I mean,
from your view.
Yeah, we got a lot of calls like over the last couple of weeks, really. I've gotten a bunch of calls from people that historically probably invest more in like traditional stocks and bonds.
Yeah.
And, are asking, if this is a good time that maybe they should get out of some of that and get into real estate because they've gotten big gains. Like, let's just call it what it is. I mean, if you bought these stocks a year or two ago, you probably did pretty well, most of them across the board. I mean, if you look at the general S&P stocks, like you probably did okay. So you've got some equity in those things. Like now maybe it's time to like look at diversification. So I think it offers a unique opportunity to those that, can get out or want some liquidity or want some diversification to look at real estate, and look at something else. But I also think it's been a weird week for a lot of people in real estate going, what does this mean for us? Yeah. Like what exactly is going on for us? Yeah. And how does this actually affect what we've got going on? Because we've got changes coming too. Yeah. Like this is, we're the real estate world isn't immune to change. Everybody's getting change, but
even the buyers I talked to over the past couple of weeks, still like wait and see. They were still waiting to see something, and obviously it's direct correlation to this new administration. Regardless of what you think, it's directly correlation. So, do you think that real estate weathers storms better than economic storms, better than the stock market?
I think that. Real estate is just different in the fact that it's tangible. You can touch it, like it's kind of the oldest form of wealth or the oldest form of like currency is real estate. And you can go out there, you can touch it, you can see it, you can feel it. It's a thing, it's not like owning a stock certificate. Not that they actually issue certificates anymore. They used to. Did you know they actually used to have certificates of stock?
I did actually. Yeah, I did know that. Yeah. But and that was an excellent point. It's because I can touch it. Yeah. It's almost like I can collect my rent. Yeah. But in the stock, it doesn't feel real yet.
Yeah,
I mean, that has something to do with it.
Yeah, I think so. I think that they're like we had the pleasure of working with a lot of like foreign athletes for a long time, and those guys, what they would share with me is like. They didn't understand our stock market, right? These guys grew up in South American countries or Caribbean countries. They didn't understand what does it mean to own a part of a company? Like, what do you mean I own stock in this business?
Yeah.
But they very much could understand real estate. They very much could understand the fact that, like, I own that particular house with that roof. This is my driveway. This is my thing.
Yeah.
And then I'm going to rent that house out, and I can earn more than what that house cost me in rent. That they could get. So I think, like, they, for the most part, people just, the idea of having it something you could touch and feel makes it just simpler. It's easier, you know? I mean, it's not as, I don't think home prices trade like stocks trade, you know, daily, where home price, you have that big swoops of volatility in pricing. It's not like that, you know, it takes longer for their adjustments to be made.
No, that makes sense. And just like, you know, unlike stock, real estate is tangible asset, to your point.
Yeah.
But it also holds value even when it's a downturn.
Yeah. I mean, look, like I forget who the person that the quote is, you know, they said buy land because they're not making any more of it.
That's right. Yeah.
I mean, it's the truth, you know. I mean, you see stuff like even in like infill communities, you know, like we see it here in Scottsdale, or we see it in downtown Phoenix a bit, where you see these homes or these properties that are kind of just left there for nothing, right? Like, I mean, people are not doing anything with them, but it's the land value of that asset that keeps them interested in it, right? And they're going, man, if the longer I can hold this, the more it's going to be worth when I go to sell, or whatever the exit looks like. So I think that's unique. It's unlike stock. I mean, you could own stock tomorrow and double your money.
Yeah.
You could own a piece of real estate. The likelihood of doubling your money on that tomorrow is not high, but it's also not going to decrease by 100% tomorrow. And you could have a bad CEO that makes a really poor decision, and a stock price goes crazy, and starts to lose money. So I think there's, it's a good tangible asset if that's what makes you comfortable. I mean,
absolutely.
We're not here to like give people advice on what they should or shouldn't do, but I think, if you want to get comfortable with something that's irreplaceable, buy some real estate.
Yeah, to that point, if you're listening, right, like, we're not saying a recession's coming. We're not giving you advice, but I can tell you what, I can give you 5 good reasons that you should invest in real estate. And it's ultimately recession-proof.
Yeah.
Did you say that, right? Like, so maybe let's go through those 5 and see if you agree.
Yeah.
But the cash flow keeps rolling is one.
People have to have a place to live, right? They got to have a roof over their head. I mean, that's an essential thing. You've got to have a place to live. You can live without going to Walmart.
That's right.
You can't live without a roof over your head. I mean, you just can't. I mean, it's not realistic.
Right. No matter what the stock market is doing, renters got to pay rent.
Somebody's got to live. You're still living, and you got to have
that.
a bed to sleep in. So you got to have something.
All right. Number 2.
Yeah.
Hedge against inflation.
Yeah. Property values tend to rise over time.
Yeah.
Enough to offset any inflationary risks. So it's like today, like you most of the homes that we're looking at today are priced, below its potential replacement value. So that's an interesting way to look at it from an inflation perspective. Like, you couldn't, like, if a house burned down and you had to go rebuild it, you couldn't build it today for what you could have built it for 15 years ago, and therefore that current asset has a lot of value, because you don't want it to burn down. Like, that's not a good thing. So that's an interesting way to.
All right. Number 3, you actually control the game, unlike you do with stock, right? So
Yeah. I mean, you're not relying on like a bad, like I said, the bad CEO decision or the company decision to, I mean, you see stuff all the time. I mean, these guys like make crazy decisions, or they get caught doing something and you're like, gosh, or like borderline illegal or whatever. And then the next thing you know, or even like what we saw this last summer with a lot of the beer companies. Remember that? Wasn't the beer company did some sort of like political commercial with some sort of like transgender person or something?
Yeah.
I don't remember exactly.
Tesla too.
Right. And then all of a sudden it's like, their stock price just dives. I mean, that's such like you don't have any control of that if you're the person that's just holding the stock. But if you're the landlord, you control the rent, and therefore like you've got control over it. And if you decide to sell it, that's up to you too. No one can take it from you,
No, I love that.
Yeah.
These next two are probably my favorite, but one of them is the tax benefits galore from a real estate side, right?
Yeah. The mortgage interest deduction, which, continues to be a conversation. The last administration talked about potentially getting rid of it.
Right.
The new administration's talking about not only increasing the deduction, but allowing you to take it on like rental assets and things too, which is like super interesting. And then, like the 1031 is just like not talked about enough. Like maybe we should bring an accountant in and do the 1031 class on this or do a podcast on it.
I agree with that.
Because it's cool. Like with a 1031 exchange doesn't get enough love. Like most, I don't know why. But
I don't think people know how to use it.
Well, like,
or do they know they can use it?
Yeah, I don't know. But I think in its like simplest form, right? Like you sell a piece of real estate that's for investment based. It can't be your primary residence.
Right.
You sell it as long as you take that money and buy another piece of real estate, like kind. You don't pay any tax on the gains that you made. And you can continue to do that over time. So it's not until you actually take the money out of the market and you do something else with it that you pay the tax on it. But think about it. You could just roll the money over time. And I mean, you have family offices that have rolled 1031s for 50 years and have never paid tax on the wealth that they've created in these real estate portfolios. Right. Well, the tax they would have paid in the beginning, they far outmade that in investments in the future. So the 1031's cool and way underused for, the mom and pop investor, I think. Like, I mean, this is something that like everybody should be doing is doing the 1031 and continue to keep doing it because it's fantastic. I mean, pay no tax to make it like, because if you sell it and you just sell it outright, you're going to pay capital gains tax on it.
Right.
And, that's high. I mean, 15% is a lot, and then depending on your tax bracket, I mean, you could pay upwards of 40% just in tax to sell an asset. That's brutal, Yeah,
we definitely need to have a whole entire segment on that. Yeah. I'm sure some listeners are now like, wait, what? What did he say?
Yeah.
What did he say?
Yeah.
It's awesome. All right.
Yeah.
So make sure. All right. This is probably this is one of my favorites is leverage is king. Why not use the bank's money to kind of build that wealth, right? Instead of riding on the market coattails.
Yeah. Yeah. I mean, like you can't buy stock with leverage. So you can't like buy $100,000 worth of stock without $100,000 worth of cash. But you can buy a $100,000 home with $10,000 in cash. Tracking?
Yeah. Oh yeah.
So, that's the game.
Yeah.
So like you can get bigger rips by buying bigger pieces of real estate, if you get some leverage and use the leverage appropriately. Yep. Leverage can be bad, don't use too much, but it's a good tool. And, the banks offer leverage on real estate because, again, it's tangible. Yep. Like if they have to take it back, the risk of that is super cheap, right? Whereas if they had to take back stocks or bonds, that's a different program. That's a whole different thing.
No, that's a good point. Good point.
Yeah.
So what do you think about some of these winning strategies for investors in this down market, right? So you heard the term where there's blood in the streets, buy real estate.
Right. That's it. It's starting to happen, right? Like, I mean, you're seeing right now in most of the markets that we operate in, which is 44 states in the country, we're seeing more supply than we've seen in the last 5 years. Yeah. And we're seeing it that supply is going on the market and staying on the market for a lot longer. And so I think that what that means ultimately, like I was asked this question yesterday, somebody on the board asked me this question and they were just like, why does that matter? I don't understand. And I said, well, the longer the property sits on the market, the more likelihood that they're going to have a price reduction or two to try to catch up to wherever those buyers are, right? The value of a home is only what a buyer is willing to pay. So the longer your home's sitting on the market, it doesn't mean it's like it's valued less. It just means that buyers aren't willing to pay that price for that property at that particular time.
Yep.
Therefore, like if you need to sell, have to, then you got to take less for your home.
Yeah.
You know, and that's like that goes for anything though. Like if you need to sell your car for cash now, right? Like you have people that do that, jewelry people, pawn shops have been doing this for years. So it's like it exists in anything that's tangible like that, that you need to sell. If you need to sell it fast, you're going to pay a premium for the convenience to sell it fast. You just are.
Yep.
And it offers a cool opportunity to buy in markets like this because, you know, you can probably buy them a little bit cheaper and then you just hold them and those assets will cash flow. Yep. And as long as you're like, you know, like I'm okay buying real estate that I can just break even on. You know, I mean, I'd like to make something every month, of course, right? But if I can break even on it, like my tenant pays all the expenses and I'm just own the real estate, well, guess what? Over time, like I'm just paying down that mortgage. So in 15 years, the tenants that I had in there, they paid the mortgage for me. Yeah. And now I own the asset for like, maybe I put $20,000 into it. And now I own this asset free and clear. I have no other debt and it's worth $300,000 or $400,000. You know, like that's cool, you know, and I think that's fun.
Yeah. So some of the best moves investors are making right now, right? To your point, buy and hold is one, right? Because to your point, a person has to have a place to live, but that's long-term rentals are gold in a down market. Yeah. To your point,
for sure.
Even if it's breaking even, I survived that down. Yeah. And then the other one is if they take advantage of getting off-market deals. Right.
That's where the deals are, you know, I mean, like the deals that go on the MLS, there are opportunities on the MLS for sure. But I think that off market is always offers you an interesting opportunity to buy something with less competition. And especially as an investor, like I'm okay competing against other investors because I know that we all have the same ceiling, right? We all have the same cash flow problem. Whereas like a retail buyer is buying with like their emotion, their heart, and they could say, I love this home. Right. You know, it's like the other day when you told me that your daughter wanted to go to Steak 44 for dinner. Like you were probably fine to go down the road and grab a burger somewhere.
Yeah, absolutely.
She wanted Steak 44, so like you had to like level up and go that route. Yeah. That's kind of the game.
We went
to
Steak 44.
I'm sure you did. Yeah, I'm sure you did.
Right?
Yeah.
She said it and sparked an idea. I had my mind set on a burger, but Steak 44. So
yeah. So, you know, so the off market opportunity offers the ability to like just play against your own people without emotions involved. Because most off market opportunities don't allow for like traditional mortgages and they don't allow for appraisal timelines and stuff like that. So it takes out all of the retail buyers. You're not competing with the emotional buyer when you're buying stuff off market.
So what Dan is saying is smart investors have signed up for Easy Street.
They have.
I'm going to say it for us, right?
Yeah.
Because, you know, I've been talking to several partners of ours and that's the fight. Is where are the deals and who has exclusive inventory? Yeah, we're just one of the groups that has exclusive inventory. So, you know, take advantage. The other one is this creative financing and seller deals. You know, people are skipping the bank. Yeah, maybe there's something you can work out directly with the seller. So
yeah, it's happening, right? Like you know, I mean, the way that rates are today, they're favorable. So, you know, you can as a seller going into a deal. You know, if you don't have any debt on the property and there's no restrictions in your mortgage to be able to carry the debt or whatever, like do it because you're not going to make that kind of return anywhere else. Yeah. You know, some of these seller carry deals I'm seeing like where they'll carry it at 8%. And people are like, why would they do that? Well, because they probably had to come up less with down payment. They didn't have to go through all the bank underwriting, all of that stuff. Right. They just went to the seller and they did a deal with like that. Yeah. Now, like the subject to deals where they're kind of wrapping the original mortgage on the property, like what I would say is any of that stuff is talk to an attorney or get somebody that's like super seasoned in this to work on them with you. They can be done. Like it can be done. There's a lot of weird ones that go on that I'm not quite sure if they're good, And so I think it's like, you got to be really careful about that creative finance. Like, so I was with somebody the other day and they said to me, like, if you hear the words creative finance to anything, put a seatbelt on, is what he said to me. And I just started laughing.
I love that one. Because you're in for a ride.
It's a bit of a wild ride. It's a bit of a wild rest, but some guys are getting really creative with some of the stuff they're offering, but it's like, I don't know. I mean, you just got to be really careful when you're dealing with people's finances,
Yeah, you're pretty seasoned. You've been there, done that. Do you find that long-term versus short-term, which one plays better in a market like this? Do you have an opinion?
I mean, I like the long-term game always. I just think the long-term game is the game. I mean, I think the other day somebody chat GPT, like what's the number one way to get wealthy? And chat GPT came back and said, buy rentals properties. And it's true because like you can, like if you had $100,000, real talk, $100,000, you could go invest that into, let's say, 5 rental properties, right?
Yep.
And you hold those rental properties put a 15-year mortgage on them, do 10% down on every single one of them, hold them, let the tenant pay the rent, and then within 15 years, you now own all of that real estate with no debt. Yeah. You could sell all that real estate and retire. I mean, that's a lot, So I mean, if it was worth $100,000 when you bought it, it's probably going to, in 15 years from now, it could be worth $300,000 or $400,000, right? And at that point, you sell it. I mean, now you're getting wealthy. Yeah. That's the game.
Now you're having fun with it.
Yeah, I'd like that.
How about the big boys? So obviously, we built our platform with the mom and pop investor in mind. So the folks with 10 homes or less. But I want them to know that the institutional buyers are shifting as well.
Yeah, starting to circle the wagons a little bit. They're starting to circle the wagons. As soon as interest rates get down to a place where they're borrowing money at a level that they can actually make a margin, they will play. They're in this game, right? Because to them, it's about deploying a big sum of money, huge. $1 billion. If we can deploy $1 billion and make a 2% return on $1 billion, that's a lot. That's a lot of money.
Yep.
There's just not a lot of places to put $2 billion that's like super safe and like has the tangibility of real estate and all those things, where someone else is taking a lot of the risk by paying the mortgage and as the tenant. So don't expect these guys to sit for long. Yeah. They won't be sitting for long. And, we knew something was going to have to break. It was going to be either interest rates, it's going to be property values, or it's going to be rental rates. One of those things would have to move in order for these guys to get back into the game. And the first one that's moving is interest rates. Yeah. How long is that sustained? I don't know, but like, I think we're also seeing property values go the same direction. In February, it was reported that 70% of all the properties listed in the country saw at least one price reduction in the month of February. Yeah. Okay. So home values it doesn't mean home values are going down. It just means that like, that's where the buyers are willing to pay. And eventually, I mean, you could see like, if your neighbor sold their house for $600,000, you might be selling at $550. You might have to get something a little bit cheaper.
No. And I know what you're going to say, right? Now is the time to act. And by the way, this is where fortunes is made, is when things shift. Yeah. So a lot of people can make a lot of money during these periods of time. So what are some of the things, Dan, that they should be doing? Because I know you're going to say take action for sure. Yeah. But what are some of those actions? What should we be doing?
Yeah, I think this is a good time for people that like maybe they've got like an IRA floating around out there, or they have a 401k that their company is working with and they've got a match or something, and they've had this thing, it's been a legacy, thing that they're looking at. Like, this is a really good time to consider doing a self-directed IRA. And I know we had JP on from Vantage talking about those, but like, this is a really good time to start thinking about, where do I have other assets that I could potentially buy real estate with? And that's usually the one that people forget about. And you could use those so easily to get into real estate. It's amazing. And your IRA can do 1031s. So guess what? You're just still not going to pay tax on all that money you make in those things. So they're fantastic. I think, you know, this is a good opportunity to start building kind of that long-term strategy. If you want to get in the game, this is a great time to do it. I don't think home values are going to stay where they are. You know, I think we're going to see a little bit of a dip, but then as rates come down, the demand is out there for sure, right? And we still have a significant housing shortage, and you could see home prices, you know, start peaking again and go back to the top. Eventually, you get to like an affordability ceiling, and that's kind of where I think we are right now. Is just like this is all these homes will ever be worth is right now, unless wages change. But it's an amazing time to get in and buy rental properties, you know, because a lot of people are going to come out of this with a lot less cash than they had before. You know, I keep hearing that the credit card debt and people's like general debt is higher now than it's ever been, you know, coming out of COVID. And, you know, they were all very cash rich, and then they got themselves into credit problems. And now they've all got credit card debt, and that's a problem.
That is huge.
So a lot of these people, I don't think are just going to have the cash for down payments to buy homes, you know, and it's going to force them into rentals.
Yeah, that makes sense, which is good for us.
It's amazing for us. Yeah, we love that. You know, we like, but I don't know. I mean, there's the whole other world, and I think we talked about it in a different one, is just people that they don't want to buy anymore. Like the risk of home ownership is shifting. You know, there was a cool podcast I listened to the other day. The CEO of one of the nation's largest owners of single family homes, Sean Dobson from Amherst. And, you know, he was talking about home ownership shift in this country and the fact that like his business feels really good right now, just from a perspective of like, I just think that less people are interested in buying homes and taking the risk of home ownership, and are leaning more into the idea of like, you know, I want to have some flexibility and some hybridability of other things. And, you know, they've been making money other ways. You know, I've met a lot of people that have made a lot of money in like crypto recently and other stocks and different things like that, which didn't exist before. So I think it offers a whole new world of potential tenants that maybe weren't into it. Like one of my friends owns a property in Paradise Valley. You know, it's probably a $5 million home. And he's got a tenant in there paying rent.
Wow.
Yeah.
What is the rent on that?
It's a lot.
Wow.
It's a lot. But
and he's probably happy renting that, by the way.
Yeah, I mean,
right?
my friend loves the idea of renting it, but I mean, he's got a few of them like that, you know, and it's for him, it's like, yeah, I mean, if I can own this luxury real estate and someone else is going to pay the mortgage for me, like, why not? You know? So, I mean, it doesn't discriminate on price point. You know, there is opportunities kind of across the board to get in the game and start playing, you know?
Would you also suggest like, don't sit back and wait, because the masses are sitting back. Maybe now's the time to jump in.
Yeah.
And by the way, locking in a good rate right now could also benefit you as well, right?
Yeah, I mean, all those people, like, do you remember like a year ago when people were saying date the rate and, you know, refinance later? And you haven't heard that one recently a lot because it took so long for rates to move anywhere. And look, they haven't moved a ton, right? A little bit, but not tons. It's, I mean, I think that any deal you're buying today should cash flow, or at least you should be breaking even today. Like that you've got to get to make true. If that's true, then maybe interest rates go down and you can refinance, or maybe the rental rate's going to go up. But one of those two, something's going to change, you know, over time. But at the end of the day, if nothing changes, you're still on the track to building wealth, you know, and I think that's cool. And there's not a better place to park your money. Yeah.
No, I love that. So obviously, if you're listening, keep an eye on distressed properties so you can find motivated sellers. Get associated with and tap into Easy Street Offers, because it's all about off-market deals, right? You got to find the right inventory. You know, block in a rate. Don't sit back and wait. You know, I love to tell people, real estate, you know, I'm learning so much, especially, you know, with our podcast and listening to you. But you're playing chess. You're not playing checkers.
Yeah.
That's what real estate is,
man.
when you're investing.
It's a long game.
It's the long game,
It's the long game.
Oh, that's awesome. So you ready to do some moves this year, Dan? What's your plan? What you got?
Yeah.
What are you going to do in this market?
Yeah, I mean, I'd like to be a buyer. You know, I think this is a good time to be a buyer. So, yeah, I'm looking at opportunities. If I can get my hands on some stuff, I think it's a great time to be a buyer.
That's awesome.
And get my hands on more long-term rental options. Like I said, anything that I can buy that I can break even or cash flow, I will consider it, because I don't know where else to put the money that I can get that kind of return. I've yet to find something that's safe enough for me, and that's just me.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.